In today's video, I'm going to switch things up just a little bit because there is just so much happening in the world right now, especially in the financial world. I mean, the markets are just all over the place. Some sectors are up and some sectors are down. We are seeing some positive trends in unemployment, but we still have inflation and interest rate worries. Real estate is through the roof, and that's putting supply pressure on things like lumber and steel. And let's not forget about Dogecoin and Ethereum because they have been absolutely crushing it. There's just so much going on, and in this video, I want to provide a little update for all of my viewers and subscribers. Let's start with the stock market. We've seen a sharp move lower in growth stocks after Treasury Secretary Janet Yellen suggested on Tuesday that interest rates might need to rise to stave off an overheating economy. Her thinking is that economic activity is picking up much faster than expected as people continue to get vaccinated and social distancing standards get eased. After realizing how much her words impacted the market, she later sort of backed up on the remarks, stating that a near-term interest rate hike was not something that she is predicting or recommending, and she added that the decision on interest rates lies solely with the Federal Reserve. But the fact is that she's not alone in her worries that the economy may be overheating. In fact, many market participants are worried of the potential for inflation and higher interest rates. A strategist at Bank of America named Savita Subramanian did some analytics on how many times the word inflation was brought up on first quarter earnings calls compared to the same time last year. Now, her research suggests that mentions of inflation on first quarter earnings calls have surged 800% since the first quarter of 2020. And really quick, if you guys could tell me whether or not you're worried about inflation or whether or not you're witnessing it firsthand with the things that you buy, let me know in the comment section below. Today, stocks have been sort of a mixed bag, with the Dow Jones closing at an all-time high and the Nasdaq barely snapped a 4-day losing streak as technology stocks have been under pressure. The fact is that investors are rotating away from technology and growth stocks because their valuations are simply being viewed as stretched, especially with the potential for an interest rate increase. In fact, in a note to clients from Bank of America shows that retail traders like you and I were the only groups to buy equities for the third week in a row. Their research also shows that institutional clients and hedge funds have been hitting the sell button for a few weeks now, posting their largest outflows in more than a month. I personally find this really interesting because more than 90% of S&P 500 companies that have reported earnings have largely blown past estimates, but the markets don't really seem to care. Now, many companies, especially tech companies, topped their estimates, but the market kind of shrugged it off, and in many cases, these companies that exceeded expectations actually traded down on the day. Now, Amazon is just one of these companies that comes to the top of my head, but there are many others. With all of the craziness in the markets, we do have some good news on the unemployment front as jobless claims reached a new pandemic-era low, dipping below 500,000 for the first time since March of 2020. Filings totaled 498,000 during the week ending May 1st. And according to Bloomberg, this was better than the 538,000 number that economists were expecting. In crypto news, Ethereum, which is the world's second largest cryptocurrency after Bitcoin, keeps extending its rally and hit a new record high of $3,616. Ethereum is up more than 358% in just this year compared to Bitcoin's 96%. Now, many people think there's a speculative frenzy going on in the asset class as a whole, pointing to Dogecoin as a prime example. For your knowledge, Dogecoin is up 24,000% over the past 12 months and is now the fourth largest cryptocurrency by market capitalization. A lot of investors or speculators are looking forward to Elon Musk's scheduled appearance on Saturday Night Live this weekend, with the anticipation that his appearance may catapult the cryptocurrency even higher. In other prominent news, stocks of COVID-19 vaccine developers are trending lower after U.S. Trade Representative Katherine Tai announced support for a waiver of intellectual property protections. Now, supporters of the waiver say there are more than a dozen drug makers in developing countries that could be equipped to produce the shots. In short, it would allow companies and nations around the world to make their own copies of the vaccines without fear of being sued for IP infringement. The United States is averaging 2.3 million shots per day, which is down 32% from the peak last month, according to the CDC. In an effort to combat this, many localities around the nation are offering incentives for residents to take the vaccine. The state of Maryland is offering $100 to state employees to get fully vaccinated. Detroit is giving out $50 prepaid debit cards to anyone who drives a resident to a vaccine site, And in New Jersey, anyone over the age of 21 can take their vaccination card to a participating brewery for a free beer. Now that sounds pretty awesome to me. But private businesses are also involved. Krispy Kreme will be giving away free donuts to anyone who presents a vaccination certificate, while Budweiser is offering a free debit card that can be redeemed for a free beer. There's even a marijuana dispensary in Michigan called the Greenhouse of Walled Lake that has been giving out free joints to vaccinated individuals in an effort that's named Pot for Shots. On the supply chain side of things, many companies are warning of supply shortages and log jams that will compel them to raise prices. I mean, we are seeing tight inventories and price surges for many things, ranging from semiconductors and steel to lumber and cotton. Even chicken is getting inflated. To put this in perspective, a sheet of 3/4 inch plywood at Home Depot is now selling for around $60, and that's up from about $30 before the pandemic. On the real estate front, the number of available homes to buy in April dropped by 40% from a year ago and 50% from 2019, according to Redfin. Now, this supply shortage has driven up the price of real estate 20% from the same time last year. Now, home sales in 2020 were at their highest level since 2006, according to the National Association of Realtors. And it's generally accepted that 2021 home sales would exceed 2020 home sales if it weren't for supply constraints. That's the Be to Business news update for today, May 6th, 2021. I really wanted to do one of these videos for a long time, especially now because it feels like there is just so much happening. So let me know if you like this format in the comment section below. And don't forget to hit that like button. I'll see you all next time.